How you doing, Shawn? You right?
Hey, what's up, Jazz? How's it going, bro?
Yeah, good, mate. How you doing?
Good to hear, man. Good to hear. Did you take any trades today?
Yeah, man. Took all your trades today.
Oh, nice, man. Good to hear. They're all
I
in
remember
profit.
someone
So,
mentioning about the Telegram bot thing that they've been using to take all your trades.
oh, have you been using it?
So I stopped. Well, I was using it on a demo first to just check if it works or not. I actually paid quite a bit of money for this one, but I tried to trial one first, which didn't go too well because it wasn't copying properly, like some of the trades. But then there was this one that I think you or someone else sent in your chat group. It was like a one-off.
Oh, yeah.
I
The
think it was like
yellow one.
$180.
Oh,
Sorry.
nice, nice. Yeah. I think that's the one that Dave is using. It's like a yellow one, or I forgot what it's called. Let me see. I think it's in here
Yes,
somewhere.
it was like a one-off payment, and I've started that. And to be fair, it works really well. It's actually really, really good.
Nice.
We're well
Yeah, I
impressed
think
with
it
it
says
because the
Telegram
problem I
profit.
had was that obviously when you wake up and you do trades at like 2 a.m., 6 a.m., the 4-hour chart, I actually used to like set an alarm to wake up 10 minutes before that to catch the trades. And obviously sometimes like you can't get up and catch your trades, right? So I used to get a bit annoyed with that. But obviously now that I got this, I can literally catch all your trades, which is amazing.
Nice, man. It must be a blessing. It's so easy for you to just, you just wait and you let it copy yourself. You let
It's so good. It actually copies all three TPs, and then once it hits TP1, it moves it to break even straight away itself.
Oh, wow. That's
Yeah,
really useful.
trust me, proper
I might
good.
have
And
to
you can
use it.
set your
I
percentage
might have to use it
loss.
for myself. Oh, yeah. Oh, you can
Yeah,
set
so
it by
you're gonna
percentage too.
yeah, so I'll set like a 3% loss per trade, and it will adjust that according to how many pips you put as your SL and TP, which is really good.
That's
But yeah,
actually really good. I might have to sign up for that myself because
exactly.
sometimes it seems easier for someone like, for a bot to just do it. So you don't have to actually like
But
follow
obviously,
it
you still
because
got
it's,
some of the signals anyway, so I think it's still the same amount of work for you.
yeah, exactly. Because I'm getting the update. So I can always just update
Oh
it.
yeah,
But
as in
yeah,
yeah. As in, you could just
yeah,
do
but
it.
it's
You
definitely a
just
lot
send the
easier.
signal, and then not worry about having to place it in MetaTrader 4 as well. Yeah, that makes sense.
Yeah, it's crazy. I've been doing some like testing with all of the results, and I think if I just let them all run to either full TP or stop loss, if I don't move the TP as it moves up, like you can make even
Yeah,
more profit that way.
yeah. So me and Mark were going over this for the UK 100 trades because obviously we've been trading it up and moving SL up every time for every 100 pips, and then for the last week we just checked if we just left it, what would happen? As in, if we got rid of TP1 for the 100 pips and went straight to TP2, and then set it to break even, and then 500 pips, and we made like I think double the pips in a week.
Oh wow, that's crazy. Yeah.
Yeah.
Yeah, sometimes it's better to just leave it alone. It's just, when the market's moving weird, it's hard to really know if it's safe to do it or not.
This week's been pretty bad. This week's markets moved crazy. Like even I lost a bit of faith today. I was like, oh, you know what? I just give up. I can't be bothered anymore. But then I gave up and didn't even look at Telegram, but the bot had done it for me anyway. So I was like, thank God, like you actually placed trades for me because I'm up now.
Yeah, because the way that the markets are moving this week, it's really testing everyone's patience and emotions,
Massively, massively.
especially
Because
for
I actually gave up. Even FTMO, like I only got a 10K one, but I'm in like, so today I hit £400 loss. So I can only hit max 500, right? So I stopped because UK 100 hit a loss. And then stupidly enough, when you sent the US 30 trade, I didn't even see it. So I didn't even enter it. And I thought like the one time I don't enter it, obviously it goes into profit, right?
oh, I hit full TP today, huh? Yeah, it was a lot of
Yeah,
people were
man.
scared about it.
That just annoyed me even more. The fact that a buy came up on US 30, like you can't not take that. It would have been the perfect trade.
I know, right? I was kind of worried too. Like when it reached TP1, I was like, should I take it off? And I was so busy in the webinar, so I left it. And then it ended up
Uh,
going to full TP. So I was like, oh, thankfully. It's
Definitely. It
crazy.
was
Did
just
you see
running too
how it
smooth.
moved?
The buy was
Yeah,
just
it
running
was
too
so
smooth. We
smooth.
had to take it.
Yeah, it's crazy. I was looking at it today. I was like, I was worried when it was pulling back right here, but then when it shot up to
Yeah,
full TP, I was like, wow, it was like such a relief.
that's amazing. Right there. So I tried to sell it. I tried to sell from there, but it just didn't work. It just went back up.
Did you try to sell it here at 30,000 or something
Yeah, I
like that?
sold it. I got to like 85 pips and then I moved my SL to 10 pip profit and that's it. Went straight back up again. So not going to keep
Oh
trying
man, yeah,
just in case it
yeah.
carries on.
Yeah, when it got to this point, I was like at 10 o'clock a.m. my time. I wanted to re-enter, but I was like, no, I'm just gonna step outside. So I went out, got some air, and thankfully I did, because if I didn't, I would have tried to scalp it even further higher. I would have lost a lot of pips that way.
Yeah, I didn't want to keep risking it and keep re-entering, because I thought next thing you know it's going to go flying up again. So I thought, forget it,
Oh
man.
yeah,
Wait for a good signal and that's it, rather than trying to chase it.
yeah, exactly, and especially with the market swapping right now at two, it's probably gonna drop a bit. I think so. Usually when it goes from session to session, it usually goes right back down. So I think as soon as it reopens, maybe in a couple hours, it'll probably drop down. I think from this point maybe down to the 30,000 point, and then from there I think it'll either bounce back up, or it's going to come right back down, because this is a very critical price point. It hasn't crossed this point uh aside from it did I think, let's see, on the 16th. I think that's the only time it's crossed it, and then before that it hasn't really crossed that part at all.
Yeah, but this is mainly because
Yeah.
of the pandemic, right? It's mainly because of the vaccine news and stuff like that. And
Exactly. Yeah, I think this was pushed up. Thankfully, it pushed up in our direction because of the vaccine news. I think they're having advancements, and I think also the FDA has approved, a few of the vaccines so that they can start using emergency vaccines on people. I think it's the same vaccine they used on Trump when he got sick.
oh, okay,
Yeah, so it pushed it up a bit.
yeah. So you know your CAD JPY trade that you sent.
Oh yeah, let me check it out.
So I closed that early in a little bit of negative, not a lot, because it's coming up on yours. I had another a level come through. You know where your pivot is, the top pivot that says 80.345.
Oh, this right here. Yeah, this where you
Yes,
got
I had a
scared.
support and resistance come up there on your
The SR.
yeah, SR.
Oh, I see it. Yeah, so it broke just above it. So brand new zone right there. It looks like it just crossed it slightly. So on
Yeah, so
that
now you're
last,
good, obviously, because it's crossed it, right? But before, when it
yeah,
was below that, and I saw that, and I thought, oh, you're gonna buy it, and I thought I don't want to risk it just in case it like pulls back. And obviously, I was a bit annoyed in my previous trades anyway, so I just left it. But look at that, it's just gone all the way up.
yeah, because I think so. This last candle right here, it closed just slightly above it. So now I think now that it's above it, it's definitely going to hit full TMP. Kind of wants an attempt me to scalp this, but I know if I do it, it's not gonna happen. It's gonna end up coming straight
Gonna be like
down.
a double trade.
Oh yeah, definitely. It's like they know, it's like the market makers know as soon as you enter a trade where it looks so good, they're gonna spike
Yeah.
it back down.
Is there, you know, when you got the smaller support resistance levels and the bigger ones, is there any difference in how, does that mean they're stronger if it's a bigger one?
Not necessarily. It just means that there's more like when there's bigger ones like this usually means that it's areas for consolidation, because you can see right here. So basically when price goes in between these bigger ones, they usually bounce between them for a longer period before it breaks out.
Mm,
So like right here, it goes back and forth instead of just, crossing right through. It kind of bounces back and forth versus, right here, if you look at these smaller ones, they kind of just bounce right through them instead of going sideways for a bit. Like you can see here, if we zoom out,
yeah.
these big ones right here, you can see price usually bounces around between them for a bit. Like maybe, let's see, from right here all the way until here, it bounced around for like a whole day, like within this zone.
So you
And
wouldn't
then
trade within the zones, right? You only trade outside the zones, isn't it?
so it depends. If the zone is very big, so like let me measure this one here. This is probably not too big. It's only like 30 pips. Sometimes the
Yeah.
zones there'll be so many zones where it will be like maybe like 50 pips. If it's 50 pips, then I'll trade within that zone or I'll scalp within it, because you can see
Okay.
right here sometimes the price cuts within the zone, like this red candle right here. You can probably take a small scalp from right here, like a small sell to this next zone for like 20
Yeah.
pips, 25 pips. But it is risky. So normally I don't do it unless it's very big. And it has to be an open one. So you can see how that new one that we just looked at, that you just mentioned,
Yeah.
this one right here is a full zone, right? So it's like there's no small zones within it.
Yeah.
So if it's a big zone like that, then I'll trade within that small zone if it's big enough. But if it's something like this, where there's a big zone, but then there's small zones within it, I probably wouldn't trade within there because those are just going to give areas where price can probably reject from. So you can see right here, price kind of rejected from it within the zone versus,
Yeah.
it just went straight down. So it's I mean, it's some, like, for me, I'll be able to identify, like, if I see price breaking into these zones in my head, I can think, oh, I'll take that trade. But if, someone that's not so familiar with these zones, it might be a little harder for them. So for me, I don't really think about it. If I see cut into a zone and it looks like a good trade, like right here, if I saw this dropping down very heavily, and then I see this right here where there's an entry, I probably would have entered this trade to catch, some pips into it, not just like where the end of it is.
So, yeah. So why is that? What made you think that you can carry on in that zone? Is it because you said it was a big zone?
Yeah, big zones. When there's a big zone, there's room for it to move within. Like I was mentioning right here. So when it's a big zone,
Yeah.
it'll cut through it and then it might bounce, off the lower end like it did right here before it continues down further. So when it's a big zone like that, you can probably cut into it. So like right here would be a short position when it closed right here. Normally we try to get out right here, maybe like 12 pips, right? But in this situation, since it's a big zone, I can maybe push maybe 30 pips out of it. So instead of going for that small move, I'll go for, I'll cut into it a little bit, and then maybe I'll push this even farther to the lower zone. But it's something that you kind of develop over time. You have to practice so that you can be confident about it. You'll see it. Like if you see this pattern, enough times, you'll know that it's probably going to drop further. Also, for this right here, how this is dropping right here, basically, if this is dropping like this, I'll go and I'll check the other JPY pairs. So I'll look at, CAD JPY, odd JPY, CHF JPY, EJ, GJ, NJ, all of those. And if they're all going down, like say we have a zone right here, but if you look at AJ and then there's like no zone right here, then you're like, okay, it's probably going to keep pushing down because the JPY is so strong,
Okay.
So there's a lot of different confluences that I use in my head that it's a little bit more advanced. It's something that you kind of you develop over time. It's not something that you can like watch me do or exactly, because like even for these confluences, I never used these before, but this year I started using it a lot. That's why my watch list, it's ordered in order. So you have all of the AUD pairs together, all of the CAD pairs together, all of the JPY pairs together, so that if I'm taking a trade, like say right here, if I'm taking odd CHF, something like that, I'll go ahead and look at all of the AUD pairs, like I have them right next to each other, to make sure that they're all bullish. So if they're all green, then I'm like, okay, if they're all green, the AUD is strong. So I should take, buys for these AUD pairs because they're all moving in the same direction. And then same situation with,
mine are like that anyway, because I'm like very OCD about my letters. So I have to have them in alphabetical order.
yeah, definitely. Yeah. And it's something that like, I never even thought to look at, because everyone, whenever they want to look at let me see, because I do have the website for the actual correlating pairs, but I don't look at it because it just takes too long for you to actually look at it. And then by the time you're done looking at it, it's like too late already. But let me see, I can search it right here in my correlation. Let me open this right here. Yeah, so if you go to my FX book, they have the correlating pairs here. If you want to see everything that correlates, like for odd CAD, you'll see that, it correlates with odd JPY like 76%. Not so much with odd NZD, it's complete opposite of Euro odd, stuff like that. Like you can see the correlations here if you want the exact correlations. But for me, this just takes too much time. If you're going to go and look, at every single pair, it's better if you just go down the list and then you just match up all of the AUD pairs, all of the CAD pairs, all the Euro pairs, GBP pairs, et cetera, because it's not, like our trade isn't going to be based off this correlation. It's just going to be extra confirmation. So if you want to take a buy, you want to see, okay, they're all pushing up, so the AUD is strong. That's going to get you more confident. You're going to be like, okay, this looks like it's going to continue up, so I'll take that trade. So that's like one other factor that I use if I'm going to take a trade that cuts into a zone, like right here for CAD JPY.
Yeah. So you see, there's some trades here that don't have a zone because they've gone past the zones and there's no new zone. So do you just leave those out because you can't do nothing with them, even though you see it dropping so hard?
Yeah. So that happened a lot with the NZD pairs over here. So this week or last week, actually, the past couple of weeks, this whole month, NZD is pushed so high to where, this area right here, it hasn't, like if you look at, let me see if it's loading. Yeah, if I load it right here, you can, if we pull back very far, price hasn't tested this area for months. Like if we, let me see if I can pull back further. I don't know what's wrong with trading view right now. It's running slow. Let me see if I can refresh it.
It does that
Oh,
sometimes.
there we go. Okay, so looking at NVD, looking at NVD CAD right here, you can see that this hasn't been tested since March 2019. So it's been more than a
Yeah.
year since it's been in this area right here, right? So because of that, there's not going to be any zones within this area currently because there's a, so the way that my algorithm works that creates these zones, like a lot of people think it's just basics. It's actually more than that. These are when the specific price point. So say these high lows, um, when specific price points, like right here, it tested 0.90110. So in order for the zone to be created, that same price point has to be tested at some point in the past. Like it has to be tested at the same exact 0.90110. It's not just an eyeball where it says, oh, there's going to be a zone here. The zone is created
Yeah.
because that specific price was like it reached that specific price and then it rejected exactly off it at some point in the past. And that's how the algorithm works because it more so it identifies like where banks are trading, because banks, when they do algorithm trading, they have specific price points where when price reaches this point, the bank's going to sell the price, so it bounces off.
Yeah.
So the K2SR actually identifies where the banks are trading. That's why I make it such a big deal that we don't trade where these zones are, because banks are usually trading in that area, and you don't want to trade where they're at, obviously, because they put so many orders in that they'll push price very strongly. So like right here, price pushes up to this zone, odds are it's going to reject off very hard because the banks have like their algorithms with a bunch of sell orders right here. And that's why we don't want to trade where where the zones are.
Okay, so if that price now goes back up, but it doesn't hit the same pivot point, that high pivot that you got on the other side, the one that you mentioned before, the other high point on the left.
Oh, this over here?
So if it doesn't reach that again and it goes down, are you saying that at some point it has to touch that again, basically?
Oh, this point right here? I'm trying to see which one you're talking
The,
about.
the one
Which
further back, one further back.
this
Back.
one right here?
No, you're the level at the top one.
Oh, the very top right here.
Yeah. So wait, it touched that previously.
So if there's no zone there, then it hasn't touched it yet. But yeah,
No,
so you can see there's no zone there, right? So if I take this off, there's no zone right there. But so say price goes up to a specific price point, see where it's exactly at.
oh, there is a zone there.
0.9 up here.
There's
Oh,
the red
way
box
up
at the
here.
top. Is that not? That's not a zone then? You
Yeah,
have.
it's a zone, but it's not on the 4 hour. It's on the weekly. So if you don't find a zone
Oh,
here,
okay.
you have to go on the higher
Oh,
time
right.
frame. So like, yeah. So say there's no zone here. Let me take these zones off. You see there's no zone up here.
Yeah.
You go on the 8 hour. There's no zone there either. You go on the daily.
Oh, you got it in the. Oh, okay.
There's no zone there, and then you go farther back to the weekly, and then there's a zone there. So that's where the zone is created.
That's where it's come from. Okay, that
Yeah,
makes.
because you can see that. Yeah, you can see that this price point was tested at some point in the past. So if you just zoom out, you can see that this same exact price point is tested like somewhere around here, where it's pushed to that point and then it's rejected back down. And that's how these zones are created. They're created because they identify exact price points where rejections have occurred at that same exact price point. So they're not they're not generalization of zones. These zones are actual like very important numbers and structures that you need to look at. And that's why I don't trade within the zones unless the zone's like very big. Like one down here, this is huge. Like you can see price comes down and then it just goes sideways once it reaches the zone. Like this one went sideways for about like 7 days. It's a long time for it to go sideways.
Yeah. Okay, that makes sense. So at some point, this NZD CAD the weekly that high point on the weekly chart, it has to touch that at some point. Is that what you're saying?
Not necessarily. It doesn't have, because it can.
Okay.
So it's within this open area right here. So it can come down. It can retest this zone down here, and then from there it could either come back up to attempt to test the zone, or it can break below it.
So do you ever place trades when it rejects the zone?
Scenarios. No, I just follow the requirements for the SR strategy, because the thing is, like I mentioned before, these zones are areas of manipulation. So when price reaches these zones, depending on where the bank's trading, because these zones were created by, bank algorithms, because they're testing the same exact price point. So when price gets to this point, it can either go up or it can go down. So if you're trading off the rejections, you're just gambling at that point, because you're not sure if it's going to go up or go down. There's no confirmation or certainty that it's going to drop like that. And the thing is, you don't want to take trades that are not for sure. It's more about taking quality trades that you have a very high win percentage, that it'll possibility that it'll win, because trading is a game of probabilities, bro. A lot of people like to just take random trades. Like if they're like a new trader, if they're watching this right here, if you didn't understand how to like draw any of these things, or you didn't have any indicators, a normal trader would think that this is they're like, oh, this is an uptrend, they're just going to take a buy there. So a normal trader, they see a rejection off this point and they're going to take a buy here, right? Because they think it's going to continue up. However, that's probably not going to happen. What's going to happen is it's probably going to drop even further, and then they're going to get stopped out, and then from here, then it'll shoot up.
Yeah. Okay.
Yeah. So I never take any gambles if it's going to reject off the point, because odds are it could reject off the point, but it can also break right through it. So the thing is, you don't want to be in trade too early if that happens, because then you're just gonna it's too risky at that point.
What was the gap between the levels that you said you shouldn't? Was it you shouldn't trade between? There's like a minimum space you need between the levels, right? Before you place a trade.
So me personally, I like at least like a 30 pip gap, because I don't like to take trades that are like less than a lot less than 30 pips, because you need to factor in spread. Like the spread right now is like what is it, 15.8 pips. Okay, we're in the spread. Yeah, obviously we're in the swap spread. So the spread is kind of wide right now, but oh shit, sorry, my dog's eating shit. Hey, Cody, come here. Cody, don't eat your shit. Cody's shit in the patio. Can you clean it up? He was eating it. He was eating his shit. He's on the patio. Yeah. I was looking out my window and I see him taking a shit, and then he just starts licking it. I was like, I gotta go stop him. Oh man, this guy, my girlfriend's dog. He's a puppy, so he eats his own shit. Yeah, bro.
That's jokes.
Yeah, but my bad. Yeah. So within these little gaps right here, I like to have at least like maybe a 25 to 30 pip cushion, because if the spread, so normally for NZD CAD, the spread is probably high, like maybe 7 pips. So you need to pay the spread to go in, you need to pay the spread to go out. So it's going to be about 14 pips. So, obviously if you're going to subtract that, 28 minus 14, you're only going to have a 14 pip profit potential for the trade. And then on top of that, you have to pay your fees. So, in reality, you're going to maybe take off another 2 pips. So it's about 12 pips. And then from there, you still have to get in and out of the trade. So the gap between where you can move your stop loss and profit and make some profit, it's not going to be really, worth the risk. Because the thing is, if you're entering that trade, you're only entering to make maybe 12, 14 pips, but then you're risking 28 pips because your stop loss is going to be farther out. So it just doesn't make sense for you to take a risk like that. I mean, if you want to scalp it, you can, but I just don't recommend it, because especially like this week, how the market's moving a little crazy, odds are you're going to get stopped out. Exactly. So like right here, like this gap right here is nice. This gap is like 75 pips right there. See, you can make a nice profit
Mm.
right here. So price broke the structure right here. You can take a long position right here,
So that would have been
55 pips.
perfect because you got your buy sell there. You got your buy signal there as well as a break.
Exactly.
Double
So
whammy.
like, yeah, so if you're looking at this here, as price moves up in profit, you can move your stop loss and profit because you have enough cushion there. So price moves up right here, you move your stop loss and profit. Moves up higher, stop loss and profit. You can even take off your target and then you can just keep sliding your stop loss higher and higher until it stops you out up here.
Yeah, because your trades quite often where they hit TP, but they just carry on. They don't stop.
Exactly. Yeah. So if you're able to actively manage the trade, which is something I do a lot of times, you can easily just let it run. But the problem with that is, a lot of people don't want to actively manage their trade. It's like, it's, not everyone enjoys trading like we do. So it's like,
Yeah,
for
it's
us,
hard as
I
well
don't
because
mind letting my
obviously
trade
while
because
I'm
I
at
want to make
work,
more profit.
as much as you want to track every trade, it's so hard to obviously be at work and do it track trades at the same time. So obviously right now just go for the TPs, but obviously
Oh yeah, yeah.
and just try taking obviously because you're asleep during our London hours, and obviously there are trades that be active right on the 4 hour charts during like our London time. So I want to be able to take those trades because obviously we miss out on those because obviously you're sleeping, right? Because obviously you don't drop signals when
Yeah.
you sleep. But yeah,
Yeah, exactly.
during those hours, and that's what I want to start catching.
Yeah, yeah, no, definitely. Yeah. Well, I mean, you guys started applying those London entries, so you guys have been doing pretty good. But no, definitely, I think London it might be one of the best sessions to trade. Fortunately, I, I tried to stay up during London, but dude, it messes up my sleeping like super bad. It makes me just knock out like crazy during the day, and then or like so
Then
I'll
you
be
end
up during
up then
London.
you end
I'll
up
trade.
missing a US 30 signal as well.
Yeah, because I'm more focused on trading New York sessions. So I'll stay up during London, and then by the time US 30 comes out for New York session, I'm so sleepy and I can't stay awake. So I prefer to just stick with US session since it works with my time zone.
Yeah.
But yeah, obviously since you're in the UK, it'd probably be more beneficial for you to trade London session, and especially because the volatility is so much higher, you'll be able to uh, you'll be able to catch a lot more moves, especially if you're scalping.
But all the pairs that I would take during London hours are basically the GBP pairs, the Euro pairs. That's it really, isn't it?
Yeah, yeah, and those are the best pairs to trade too, the GB pairs and Euro pairs, especially like if you're trading like something like GJ, it actually moves very fast. Like right here is like a 90 pip move. And it's funny
Yeah.
because I call this trade and people are like, worried and they're saying, oh, it's such a big stop loss, but they didn't even go into any drawdown. A lot of people don't realize that you're supposed to move your stop loss and profit. So price moves up, you move your stop loss and profit, and then you slide it up as it continues to move. Um, but too many people are too focused on the stop loss, which should never be um, it should never be someone's like concern, because the stop loss is only there as a safety net. It's not there because we're expecting to lose. We're expecting to win, obviously. So the stop loss should never like, bother someone to, take a trade.
Yeah, so I caught that trade 2 candles before when you called
Oh,
it.
did you? Nice. Oh, so
Yeah.
you got in like way early. Yeah. This was actually
Yes.
perfect. Yeah. It was a perfect entry because this candle just closed above the zone. So it literally just closed a little bit above it.
Yeah, that's
And
right
then
there.
it went straight up. There was like no drawdown at all. So it was
Yeah, that
perfect.
was a good trade. Enjoyed that one.
Yeah, I'm glad I called this because it happened like at 6 a.m. This is like literally I just woke up because usually wake up at 5, but I've been waking up later. And I got to my computer like at like 5:45, and then I saw it and I wasn't gonna call it, but I was like, I'm just gonna call it. So I called it and then we hit it. So I was like, perfect. It worked out.
Yeah, that was a good trade. But yeah, well,
Yeah.
yeah, because my 4 hour charts all look really good. So I think I'm catching decent trades now. Well, on my demo I've started, so hopefully in the London hours now I can start catching more, and then obviously I can show you what I've done. I'll track
Oh yeah, nice.
my FX book
Yeah,
and I'll
definitely.
make a separate account for that.
Yeah, I was thinking about doing that too. I should start it on my FX book because a lot of people ask for it. The reason why I don't use my FX book is because I trade off, trading views. So I can't connect. I don't have an MT4 account that can connect to it. I might start one just to, keep the results all in one
Oh,
place.
yeah, because I use Social Trader, so it mirrors my trades. So I basically trade on my real account, and then I mirror it onto my FTO at a 0.25 risk. So it lowers the risk by 0.25. So whatever I place on my real account, it's almost like the same value, but it decreases it, but it only trades it by a quarter of the lots that I place. So obviously I never blow my FTMO account basically.
Oh, nice. Oh, yeah, yeah. So yeah, I use that too. That's actually a really good program. The only
Yeah,
problem with Social Trader is, so I started using that recently. The problem with it is with US 30 because the pricing difference.
oh
So
yeah,
I don't
yeah.
know if you've ran into that issue before, but I've been running into that issue lately, and it kind of sucks because it'll enter the trade really late, like we're in drawdown, so I'll get in at a discount, but it still enters the trade like very late. So sometimes I'll miss the trade on my personal account.
Oh, I don't really trade US 30 on my real account. I get too scared. I only do it for FTMO. I feel like I need a
Yeah, I on my real one, I only trade a small amount, like 0.01,
oh yeah, that's the
which
problem.
is not bad. I still make
With my broker, I can't do that. I think it's a US thing where you could do 0.1 and 0.01 because with IC markets, who I'm with, obviously in London, London brokers don't let you have a leverage of more than 1 to 50.
Oh yeah, yeah. No, it's yeah,
So
it's the same with the regulated brokers. I think they have like it's a max like 1 to 30 or something like that.
yeah, so most London traders trade with obviously foreign brokers. So everyone, a lot of us use IC markets and they only let you trade with one lot.
Yeah, it's kind of risky. I have one person that was asking me about that too, because I think the one lot is pretty high. It's
Yeah, so it's a shame really because I don't really want to open another broker account with the US. I tried to open one with Hugo's Way, and they were really weird. They wanted me to transfer my money to Bitcoin wallet and then transfer the money back into Hugo's Way via Bitcoin. Do you do that?
yeah, yeah, it's weird. I do the same thing. When I first opened my Hugo's Way account, thankfully now I don't have to make any deposits because I just make profit now off it. But before, when I wasn't as profitable, and I was trying to make deposits, it's such a hassle. You have to buy the Bitcoin, then you have to transfer it to Hugo's Way, and then you have to transfer to your actual account. And I don't even know like like how it all works, but it's a long
Yeah.
process. Yeah,
Yeah, I
it's
just sort of gave up on it. I only done it because I wanted to trade like smaller lots on US 30, but I was like, this is too much hassle. I can't be bothered. And also, I didn't even know how to do this Bitcoin thing anyway. I'm not really into cryptocurrencies, to be honest.
Yeah, exactly. And the reason why I was always worried about it is because if I make a big deposit, like, a couple thousand with Bitcoin, and then the next day, because it was like when I signed up for Hugo's Way, it was like 2 years ago when the Bitcoin was really low. So I didn't want to buy Bitcoin. And then by the time I transfer it to my account, it's already less than what I bought it for.
Exactly. So that's what I was worried about as well. For Bitcoin's always moving. So what if, how would they work out the same value that I've put it in at? Would it change or what? So I was like, no, forget that.
Yeah, and that's why I switched over to VLoad because they have another option where it's a VLoad deposit where it's like a digital gift card, something like that. So you
Okay.
buy a currency amount with the gift card and then you transfer it over to Hugo's Way. But it's all sketchy, because I'm always worried that my money might get lost or lose the code or something like that.
Okay. But bro, that pretty much sums up all my questions. I'm glad I'd had this call because you've literally answered everything.
Yeah, definitely. So you've been drawing your own zones, right, on the charts for
Yeah,
your
100%. So I
trading
just
view?
leave them on there like that. So whenever I see when I flag it and I leave it on like that, so I can see where it is at, whether it hits my TP or not, basically.
Yeah, yeah, because the zones make a huge difference, right? Because when you have the zones on the chart, you're able to see where rejections are going to be at.
Mate, these zones have changed my life.
Oh yeah, no, definitely. Even
You lost
myself,
it
when I
without them.
first figured, yeah, when I first figured it out, because before I never traded with zones, I just traded with the momentum. And one
Mm,
reason why I created the zones is because sometimes I'll be taking trades, like I'll have the momentum, and then it just reverses on me. So I'm like, I'm taking a buy position right here, and I'm like, what the hell? Why did it reverse on me? And I'm confused. Why did I lose this trade? So that's where I came up with a solution. I was like, oh, there's probably areas where price is rejecting from, like it's within a structure. So like now that I have these zones, I understand why, this buy position, I shouldn't have taken it because it was in a zone. So it rejected right back down. But then now that you have the zones, it makes it so much easier because you can understand why price is moving a certain way.
I mean, looking at it, I'd think catching a momentum signal and a break in the levels would be quite a rare thing, but it happens quite often where you get the same thing. So you get a sell signal and it breaks the level at the same time. It happens quite often, doesn't it, with the buys as well?
Oh yeah, definitely. Yeah. And another confirmation that I use sometimes is I turn on the pivots, and then it gives you even more confirmation because you can see the direction of the trend. It's not necessary, but I use it sometimes because sometimes I like to see where, the rejection points are coming from.
So on the 19th there, 19th of October.
With things like the K.
So on the 19th
Yes,
of
19th,
October, I think
yes,
you're cracking up a bit.
Oh, over here. Yeah, I see.
There's a buy signal. Where are you?
Oh, this one right here.
To the right? To the right? To the right. Yeah, that one.
Right here on the 21st.
Yeah. Oh, right. Yeah, 21st. So there's a buy signal there and it's broken up, but it hasn't gone further up. Is that because the gap was too small, do you think?
Yeah, the gap was too small. So what happened was it broke above, and then as it reached this next structure, like it did right here, the next zone, it rejected it. Yeah, it rejected right off it. There's another strategy that another member has been using, and the thing is, you're free to create your own strategies with indicators. And this is one thing that he showed me too. Well, it's something that I used to apply before, and I kind of got his mind thinking about the strategy, and it actually works very well as well. Like you can also look for when price rejects off a zone, like how it did right here, and then when it's followed by a sell signal, it generally continues down in that direction, because what happens is the rejection happens and then it just consolidates sideways for a little bit, and then the momentum confirms the direction downwards. Same situation right here. Like right here we have a buy signal. You see this nice rejection off this lower zone right here, and then it's followed by a buy signal. So once that happens, it ends up pushing price way up. So that's maybe one thing that, because I remember earlier you asked that, you said if I saw rejection, would I take a trade? And I said not if it's just a rejection, but if it's a rejection and then it's followed by a signal, then I might take it. Depending if it's like wide out in the wide open, like this right here. You see price comes up very strong to strong bullish momentum, and then nice rejection off this zone right here, and then it's followed by a sell signal. So if you took this sell signal right here, you could have. That
literally happens every single time. So even further down, you got rejection, and then it hits a buy signal. It's gone flying up.
Exactly. See, price breaks from right here, buy signal, and then you could have. It would have been, if you wanted to use the K2SR strategy, you can enter right here, or you can enter right here if you want to take like a risky trade, because you could have also taken that right there, stop loss right there, and then pretty much rode this all the way up here for like 200 pips. And it happens all the time. Like if you just pull back and you look at the charts, like even over here, you can see whenever price rejects off these points, like right here, price rejects off this point, buy signal, and then it shoots all the way up right here. Same situation right here, rejects off this point, buy signal, and then it shoots all the way up here as well. So there's a ton of ways to apply, different strategies, and you're more than welcome to practice if you, because the thing with K2 is like a lot of people come to K2 with knowledge already of trading. Not everyone's brand new, so they already know how to trade. And what they do is they use the K2 indicators to implement their own strategies. Because sometimes people come to K2 and they have strategies, but there's always a flaw. There's something that doesn't make it profitable. Like they don't know which direction to trade. They don't know how to identify structures. They don't know how to identify trend. And then that's where the K2 indicators come in handy, because they help you identify, you have the momentum indicator to, point the direction of price. You have the structures, where not to trade. You have the trend if you want to trade with the trend. It's pretty much everything. And that's how I created the K2 strategies. I pretty much wanted to cover all corners so that you have a full strategy. You know, the strategy is covered in all directions. So like whenever you run into an issue, you're able to solve it using one of the K2 indicators.
That makes sense.
But this
As
is
long as,
kind
your,
of
as long as your indicator is always
like,
there, man, they better not disappear someday.
yeah, exactly. No, definitely. Yeah. And they're always useful depending. And, you know, if we run into more issues, which I'm pretty sure, you know, we will, because with trading, it's like solving a new puzzle. Every day, it's like a new puzzle. So if we ever run into new issues and I figure out, you know, there's something that needs to be changed, then I'm always going to be available to create something new that'll solve that solution. The problem with the K2SR, the reason why we have to draw these zones is because TradingView didn't allow for us to have these filled in right here. Like you can see that we have the zones, but they don't allow for any filling to happen within the zones. But uh,
Yeah.
over the years, they started to implement new functions within the code. So that might be the next step for me. The next step for me might be to have these zones colored in. So I'm gonna work with my coder and I'm gonna try and maybe you know, work something out, because that would save us so much time instead of having to, you know, draw our own zones.
Yeah, I mean, that's just little tweaks in general, but the general setup of support and resistance of what you got is like, that can never change, right? That will always be there in trading. Like, it's nothing that will ever need updating in sense.
Exactly, yeah, because the algorithm, what it does is just identifies, you know, errors of rejection. So
And
that's
that's
never
just a way of trading for life. Like, you can't really say, right, I need to improve on support and resistance because there's only one support and resistance, right?
exactly. There's only one support and resistance. But the thing is, if you don't have the indicator, the problem with a lot of people is they don't know how to identify support and resistance. You know, like
Yeah.
people might think, oh, this is resistance, this is resistance. Like everything is resistance to them. But
Yeah.
when you have the K2SR, there's no guesswork because it already shows you exactly where everything is. So you
Yeah,
don't
that's
have
what I
to.
mean. So obviously that would never need to change. Your actual indicator itself, we can hold on to that for life and keep using it.
Oh yeah, exactly. No, 100%. And this is the foundation of trading, you know. The foundation of trading is just identifying where the rejection points are. So once you have the rejection points, on top of that, you just turn on the momentum indicator. You have like a full strategy right there, because you
Mhm.
can identify rejections and then, you know, ride the momentum when you get a signal in that specific direction.
That's crazy. I'm trying to think of a favorite pair that I want to keep practicing on, but I'm not sure what to choose yet. I'm thinking GU or GJ.
You know, I noticed that the JPY pairs are probably some of the smoothest pairs because they're paired with such a heavier pair. So like GJ, you know, the GBP is like a very heavy pair. It's a strong pair. And then the yen is a safe haven currency. So they're always going to be lopsided. They're not going to be going sideways. They're mostly going to be going either up or going down. If you trade
Mm.
something like, well, it depends on what strategy you like to apply to. But the JPY pairs are usually pretty spot on. If you want to trade something that consolidates, you can trade something like EG, because you can see here this pair normally just goes sideways for the most part because it's just the pound versus, you know, the euro,
Yeah.
and it usually goes sideways most of the time, and it doesn't move very much. Like it'll move like 20 pips versus, you know, GJ over here moves like 100 pips. So
Yeah.
it just really depends on what type of trading strategy that you want to apply. But I think the
Man, I
JPY
just want
pairs
some
might be
nice, smooth, easy trading. That's it.
exactly. So I think you should
Drama like
probably
USD
focus on.
pairs.
And so the problem with the USD pairs is that they're heavily manipulated. I don't know if you've noticed. The
So
reason why
much
they're
drama. I feel like it's just drama with USD pairs all the time.
Oh yeah, no, definitely. Because the problem with the USD pairs is that they're called major pairs because they're the pairs that are traded the most. So the
Mm.
thing is, if you're trading something that everybody's trading, the market makers and the banks, they understand that. They know that, oh, everyone's trading, you know, odd USD, GBP USD, NZD USD, like anything paired with the USD, it gives them opportunity to manipulate price. Because like say right here, like you can see all these huge spikes right here, like from right here, this is a
Yeah,
spike of
crazy.
like 60 pips, another spike below it for another like 60 pips right here as well. Like they like to fuck with people when you're trading a major pair. So it's for major pairs, I usually like to get in and out rather quickly rather than holding it long term, because you know, if you're holding a trade right here and you got caught in this spike, this huge spike is like 170 pips, big
That's
move.
crazy.
And if you compare that to something like GJ over here, you see big movements, but not so many spikes. Like there's a
But they're in
couple
the right
spikes here.
places. Like that movement with the one that you're next to, that sell movement, where'd it go?
Oh, this one right here, the one I was just looking at.
Yeah, where'd it go?
So this happened during election. So this is November 3rd. That's why the spikes happen right here.
Yeah, but still,
That was
it's still rejected at the right point, right? Because it still hit the level, like the resistance and support point, and then it went down. Whereas the other ones just are so random in the middle of nowhere.
exactly. So this was right at the zone. But if you look at AU over here,
It was just the
yeah,
middle of
this spike
nowhere.
is in the middle, yeah, out in the open, right? There's really no
Exactly.
structure for you to look at. So that's why I
Yeah.
personally don't I don't like trading the major pairs as much. I used to. So when I first started trading, the major pairs were my favorite because I figured, if more people are trading these major pairs, there's going to be a lot of volatility there, which is a good thing. So it's a good thing for us because we have the momentum indicator, but majority of people don't have this. So when I first started trading and I was trading, the major pairs, I didn't even know what direction to trade in because everything looks like it's going to go in one direction. Like you see price go down and you see it go up, and you're like, okay, it's going to continue down. Like say if you're watching this right here, what's coming down, if you're a new trader, this looks like it's going to continue down, right? Because it's in a clear downtrend right here. So if you're looking at this right here, you're like, oh, there's only one way that I can go, continue down further. However, it doesn't do that. It ends up going complete opposite. So, and this is like back then when I didn't have, yeah, it's back then when I didn't have any indicators. This is basically when I was trading from scratch. And the thing is, it's funny because a lot of people don't like indicators, but indicators actually help because they just help you identify areas that it's hard to identify, with your naked eye. Because the thing for you is like, well, not just for you, but for everyone else, it's not going to be very easy to identify these zones without having the K2SR indicator. Also, it's not easy to identify momentum without having, the momentum indicator here as well. So um, it's definitely beneficial. I don't know why people hate indicators because the thing is, indicators are created from someone else's thought process. Like all these indicators are created from scratch. So I can explain how I figured out this formula to identify this momentum, and the same formula why I can identify, the K2SRs. Like it's something that I actually see in my head, but I need to show you guys visually so you guys can see exactly what I see as well.
Yeah. Oh, that's cool. That makes sense.
Yeah, but yeah, I mean, you should play around with any pairs to see what you like, and then just focus on that specific pair. Because the thing is, like for me, I really like US 30. So for US 30, I'm able to identify patterns without even really, taking too much time looking at it. Because I look at it every single day when we take that daily entry. So I understand how it moves, throughout the day, and that's why I only trade it during New York session because I know exactly how it moves during New York session versus Asia session and London session in general.
Well, with the London session with UK 100 now, I'm hoping that I learn a bit more about that and start working that a bit more. It's looking
Oh
good.
yeah, definitely. Yeah. You should probably like focus on the UK 100 and the DAX. Those are both good. The thing with the DAX is that it moves in blocks, so it's kind of risky to trade. It moves a lot heavier than US 30. Like US 30
big
will
candles.
it moves like 20, 30 pips per second sometimes. So it's a bit risky when you're trading the DAX versus US 30. That's kind of why I like US 30 more. But I did see that you guys have been killing it with UK 100, which looks, it looks very similar to US 30 just during London time.
Yeah, it does actually move very similar. Like when I get my alerts now on TradingView, I get them pretty much the same time as US 30 and UK 100. Pretty much have the same, almost the same alerts with the momentums.
Yeah, definitely. So when you guys enter this trade, you just enter from London open, so about midnight my time.
Yeah, so as soon as it hits 8 a.m. my time.
Gotcha. Okay. Yeah, so like for this loss right here that you guys took, I feel like this trade might have came too late because it seems like when it's
yeah, I thought the same because I thought anything after 12 o'clock, really, the opening momentum is gone, right? So we're already at midday in London. So any sort of momentum that's supposed to happen is sort of past for me. In my head, that's what I think.
Exactly, yeah. And it's the same with US 30. It's why I don't trade US 30 after like 10 a.m. my time, because the market's already been open for, 3 or 4 hours already. So at that point, the momentum's already gone. Everyone's,
Yeah.
going away for the day, and it's just too risky to take a trade. Because if you took, I think the one yesterday, it was good, right? Let me see.
Yeah, yesterday or the day? Yesterday. I think it was yesterday.
Yeah. Oh, yeah. So like right here, this was yesterday, midnight, London Open. Only a few minutes. Let's see, 1, 2, 3, 4, 40 minutes after market open, and you guys caught
Exactly.
that momentum right there, right on point. Straight to full TP.
Yeah.
And it works very nice. Like maybe on one of these days, if I'm awake that late, maybe I'll take it with you guys. But it
Yeah.
definitely plays out very well. Like again, right here, see, right here was midnight. The signal came at one, maybe like 1 hour open right here, and you hit this for full TP, straight to full TP.
Exactly. But it seems that it's the later
So maybe
ones
that's something that you
aren't.
and Mark can talk about. Just keep in mind if the trade comes. Exactly, yeah, because it's the same with US 30. So with US 30, once price reaches, a certain midway market, it usually reverses in the opposite direction. So it becomes a bit more risky for you to take a trade if you're catching one that's a little too late in the market.
Mm.
Let's look at one more. Let's see this one. Oh, even this one right here. So let's see how far was this from. This was kind of pushing it, but it's still on time. It's only about 3 hours, not 4 hours like the other one. But even if you took this
3
one right
hours
here,
is still
let's say
fine. So 8, 9, 10, 11. That's still fine. I think it's the ones that you catch after noon for me. So say 4 hours after market opens, 4 or 5 hours after. That's it. When you start going into New York open time, when you start heading into New York, then I feel like
when you
UK is just go and sleep.
Exactly. Yeah, exactly. So when you cut into the New York session, that's when the other trades start coming in. So the momentum moves from the UK market to the US market. And at that point, it becomes a little uncertain how the market's going to be moving.
Yes, I think today the US 30 London trade came at the same time as UK 100, which was around 1:30 p.m. for me. And obviously your market for me opens at 2:30. So it's cutting very fine into it. So I said that in the group chat as well. I said, I'm not taking it, but here it is if you want it. And it went the wrong way straight away.
Yeah, no, that's good to know. I mean, it's something, you live and you learn. Like, you're not going to learn everything all at once, but that's how you better the strategy. That's kind of how I developed the K2 strategies. I would start with foundation of what I'm looking for, and then from there I'm like adding on these little things just to see exactly where like what I can add to it to make it better, to prevent myself from running into any more losses, basically.
Yeah. Still get tempted though, don't you? Even though it's a late trade and you say you don't want to enter it. Like I still entered it late. I entered it for so I hit SL at 100 pips rather than 200 because I entered it later. I thought it might pull back. I thought worst case, I don't mind losing 100 pips, but you still still entered it.
It's always a risk, because sometimes you just have that feeling where you're like, I need to take it. I need to, like, especially if you're waiting for like 4 or 6 hours, you're like, oh, I want to take it. And then you take it and then it ends up going, opposite direction. But it's fine. As long as you have a higher win percentage than like 50%, then it'll be fine because you're going to balance out at the end of the week, the end of the month. You're always going to be in profit eventually. That's the main key.
At the end of the day, our full TP's at 500 and SL's at 200. So even if you hit 2 SLs and 1 TP, full TP, you're still up.
You're still fine. Yeah, exactly. And that's the thing with a lot of traders. They don't understand that trading is like long-term game, You're not going to be rich tomorrow. You're going to be rich maybe a year from now, 2 years from now, 3 years from now. As long as you just stay consistent with, the trading and whatnot.
Yeah. Right. It's getting kind of late here now, so I'm going to have to go.
Yeah, bro. Yeah, definitely. It's good talking to you. The questions we could get on for another meeting, but I think you're pretty much on the right track. Or just keep practicing, and then over time you'll have more questions. I'm sure we can always go over it at any point.
Yeah, no, 100%. So I'm just gonna go over my trades now, mark them up for London opening times,
all right, bro.
and hopefully catch some good shit.
Yeah, bro, definitely, man. Good luck to that. Hopefully, I'll stay up one time, and maybe we could do a live session during London
Yeah,
at
that'd be
some
great.
point, maybe, and I'll take these. You'll keep trades with you guys.
Cool, Shawn. Thanks for that.
All right, bro. I got another meeting at 3. Yeah,
Cool,
definitely. So I'm
man.
gonna hop off right now. I'm gonna get ready for the next meeting, and then I'll catch you in the chat, bro.
Sweet, bro. See you later.
All right, man. I'll talk to you later.
Cheers.
All right, see you.